It is indeed for all of us to run along with the new things, new invention and new ideas. Those who changes and adapt themselves for a new thing will survive, and those who refuses and afraid to take risks to change oneself will be scrapped away by the strongest. Hence, it is necessary to change ourselves for the trend and the flow of this world. It is the unwritten rule of the nature. Let me tell you a story. In olden times, people used barter system for trading. That means, if you have a sack of rice, you need a sack of wheat. You should exchange some other commodity to get the wheat. So you need to exchange the rice for gain the wheat. In ancient Rome, the Roman soldiers used to receive the household salt, which we are using nowadays as salary. The word salary itself originates from salt. It is crazy to hear. Ancient people worked the entire month and received in return this salt, and the time goes by, people were using copper, bronze, and gold in exchange for goods, using it for trade and expenses for livelihood. Now, the moral of the story may arise a question that what should be the right thing which should act as money or intermediate commodity to enable the exchange and the ease the trade. You can't decide and finalize your terms of money. If everyone are using silver as money to survive, you need to use silver. If you use gold, then it's your choice. Now, the wake-up call is made. A new era of money is going to arrive in the name of digital rupee. It is not going to entirely replace the former existing currency, but you need to know the future before it is going to happen to survive in this modern world. In Feb 1, 2022, in the Union Budget, our Finance Minister Nirmala Sitharaman proposed to introduce a central bank digital currency known as CBDC in the upcoming financial year. The Reserve Bank of India will launch the CBDC that will be backed by the blockchain technology in the upcoming financial year. The announcement comes in the middle of the debate regarding the future of cryptocurrencies in the country. Last year, the RBI had announced concerns about the spread of the private cryptocurrencies and stated that they could cause financial instability. The government's move towards the digital currency is also seen as a way to promote digital payments and push forward its Digital India agenda, reports the Indian Express. The RBI is expected to use blockchain technology to introduce the digital rupee as a CBDC, according to reports. This will make the currency a digital fiat currency and make it subject to regulations by the central bank. It will enable users to conduct domestic and international transactions which do not need a bank or a third party. Countries such as Nigeria, Bahamas, and some islands in the East Caribbean have already introduced CBDCs. Many experts say that the Indian government is worried about the growth of the cryptocurrencies like Bitcoin and Ethereum. To encounter the growth and make this decision fruitful, 30% tax was imposed on these cryptos, and it is clear wake-up call to enter India to the new era of its own digital currency or digital rupee. In her budget speech, she said, introduction of central bank digital currency will give a big boost to the digital economy. Digital currency which also lead to a more efficient and cheaper currency management system. Now, it's time to acknowledge some important facts and insights about the new arrival of digital rupee. Will this digital rupee worth equal to our existing paper money? Will it cost, and how it will going to impact the existing unmonitored cryptocurrencies? Can this digital rupee be mined like others? Yes, here is the answer. Central bank digital currency will going to be the authority of the transaction and the maintenance of this digital rupee. CBDC is same as currency issued by the central bank but takes a different form than paper. It is a sovereign currency in an electronic form, and it would appear as liability on a central bank's balance sheet. The underlying technology, form and use of CBDC can be molded for specific requirements. CBDC should be exchangeable at par with cash, according to the RBI website. This CBDC is a legal tender issued by the Reserve Bank of India. The needs for the CBDC systems are: central banks faced with dwindling usage of paper currency seek to popularize a more acceptable electronic form of currency. Jurisdictions with significant physical cash usage seeking to make issuance more efficient. Countries like Denmark, Germany or Japan, or even the United States. Central banks seek to meet the public's need for digital currencies manifested in the increasing use of private virtual currencies, and thereby to avoid the more damaging consequences of such private currencies. The key things which we needed to understand about this CBDC are: it is a digital form of country's flat currency. It means that the value of the country's paper currency is packed to its value. You can buy 25,000 digital rupees with 25,000 paper rupees you are having at your own hands. This CBDC is issued by the monitored by the national authority. Hence, it is a centralized system and there will be a no anonymous transaction like some cryptocurrencies. A CBDC promote financial inclusion and simplify the implementation of monetary and fiscal policy of the government. But the most important unspeakable fact is that many countries are exploring how the CBDC will going to affect their economy and financial stability. Payments using CBDCs are final and thus reduce settlement risk in the financial system. Imagine a UPI system where CBDC is transacted instead of bank balances, as if cash is handed over. The need for the interbank settlement disappears. CBDCs would also potentially enable a more real-time and cost-effective globalization of payment systems. It is conceivable for an Indian importer to pay its American exporter on a real-time basis in digital dollars without the need of the intermediary. This transaction would be final, as if cash dollars are handed over, and would not require the US Federal Reserve System is open for the settlement. Time zone difference would no longer matter in the currency settlements. There would be no hazard risk as per the RBI website. These are the disadvantages of existing UPI method and the need for the CBDC method mentioned by the RBI. In comparison with existing forms of money, the CBDC offered benefits to users in terms of liquidity, scalability, acceptance, ease of transactions with anonymity and faster settlement. The RBI doesn't want to rush into the new domain of CBDC because only about 87 countries are trying exploring this method of digital money, and many of the countries are just in the beginning stage. There is a lot to understand and study about CBDC, and the great thing about the CBDC is the overall cost remittance for this transaction over other countries. For example, if a worker employing in one country and receives 50% of his salary as digital money, if allowing to make transaction will reduce the fee from 7% to around 2%, it can give a boost more than $18 billion a year in our country. It may vary a bit. Other thing to be discussed is that the working of the CBDC is going to use a blockchain technology. It is going to maintain a centralized ledger system that holds information in a chain of blocks. A blockchain-based digital currency will allow the RBI to control it at the same time protecting the privacy of the CBDC holder. Privacy is retained on the user end. Security features are advanced compared to normal payment systems, said Manoj Dalmia, founder and director of ProAssets Exchange. Blockchain is shared immutable ledger that facilitates the process of recording transactions and tracking assets in a business network. The digital rupee will use the blockchain technology to come and live, and the network will be used for facilitating transactions, says Vishnu Gupta, founder and director of Nosblock Blockchain Studio. In short, to that, the government will going to miner of the digital money. The expert sayings are Sumit, co-founder Neobank FI, said that the RBI could explore a centralized system of issuing the CBDC. Blockchain is a distributed ledger technology that the RBI can use to launch a digital rupee. However, it implies that the central bank will not have the complete control over the currency since blockchain is decentralized in nature. The RBI could explore a centralized or permissioned system of issuing its CBDC. But this also brings up questions of privacy and surveillance, as users and usage of such currency can be tracked by authorities unless the system allows for anonymity or pseudo-anonymity, said Sumit. We will need to evaluate available technologies on multiple criteria like accessibility, privacy, scalability, etc., said Meher Gandhi, partner and payments transformation leader, PwC India. A decision needs to be taken based on the model selected if there should be a centralized technology or decentralized technology, he added. In conclusion, it is not meant that CBDC is going to make a tremendous change in the financial structure of India, but you can acknowledge and make gain by this by knowing well about it. I hope you all guys get an idea about the new digital currency and pros and cons about it. If you like this content, keep motivating us. Like this video and share it with your friends and family.